Morning traders, welcome to the Traders Lab. I'm your host, Tom B. Thanks for visiting. Can I please get a screen and audio check in YouTube and the Bookmap Discord Trader Lab community? Thanks, Marty. And how are we doing in YouTube this morning? Hope you guys can hear me okay and that everything is stable. I'm currently streaming from Mexico, so I want to be sure everything is hanging in there. And how are we doing in YouTube? Thank you, Stephen. Well, good morning, everyone. Welcome to the Traders Lab. I'm your host, Tom B. I stream live Monday through Friday, 11:30 to 1 p.m. Eastern Standard Time, and this stream's about integrating Bookmap order flow tools with auction market theory using the volume profiles of chassis in the intraday developing time frame. It's based on structured trades, and these are available to all of you at no cost, as well as the Trader Lab community, which is a group of like-minded traders who have come together to leverage their collective experience. And it doesn't matter how long you've been trading or what you've been doing or even how you do it. What does matter is that you're interested in understanding the business of trading. How does the market work? Why does it do what it does? And how can you at times get in alignment with it? This is about the business of trading. And the idea of the Trader Lab is to help traders get an understanding of what the business is and also, more importantly, what it's not. This is not a business of being right, and it's not a business of confirmation or certainty. We're actually in an environment of 100% uncertainty 100% of the time. And instead of trying to bend what we do or bend the plan or the business into where our comfort lies, we actually have to embrace our discomfort and find other ways or tools to manage our need for certainty and to avoid risk. It's kind of a interesting catch-22 because the things our primal wiring dictate that we seek, which is to avoid risk, are actually the things we must embrace. We must embrace risk to understand it and to learn to manage our response to the uncertainty. The way to get the uncertainty under control, and this is potentially going to be your greatest obstacle, in spite of what you think, because your thought process is to look for certainty and confirmation, loads of indicators, time frames. And that's the quest most of us go on. We're all the same. We've all done it. But the problem is we're trying to bend the business into our needs, which is not what the business is. Instead, maybe the better objective is to adjust ourselves to this business, then attempt to create sustainability in an environment that's uncertain. I hope that makes sense. And again, if you're visiting us maybe for the first time or even back again, thanks for visiting Trader Lab today. General disclosure. All Bookmap Ltd. materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or representations or recommendations even. Risk disclosure. Trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Please remember this is not a trade calling room, but if we get into real time, as they say, we'll talk. Now, I am on a laptop, so this makes things a little more unique. So please bear with if there's any pandemonium released here. By the way, I need to mention to you that Bruce, our lead educator, has a pilot program. It's about building edge. And if you don't have an edge, you're gambling. Sorry. It might be fun, and you are going to have winners just like the gamblers do. But if you don't have statistical probabilities on your side, same as the casinos do, think about it. Go to casino, entertain yourself. The business, the casino's in the business of gaming. The gamblers are just the gamblers. So which side of the table are you sitting on? How do you determine if you're a gambler? Well, gamblers have winning hands, so that's not the problem. We all have winning trades, so that's not a problem. But without a statistical edge over time, which side of the table do you think the dollars are moving towards? Think about it. Ponder it. And if you were like me, working hard, but waking up with Trader Groundhog Day, in other words, winners and all that, but just need more of the same, maybe more indicators, more confirmation, but ending up in the same place, you might want to find out what's the difference. Now, one of the ways you can do that is download the 60 PDFs that are available to all of you at no cost in TraderLab. Now, these are structured trades. Now, when I put these together, it was only because traders are asking me, what are you doing? And, we all have the days where we ask ourselves, what are we doing? But reality of trading, and this is from 2020, is that process and structure can create statistical probabilities. Statistical probabilities are not the outcome of the next trade. It's the outcome of all the trades when this certain condition shows up. So there's 60 of these. And I'm not a vendor. There's no cost for this. I'm just someone who's been doing this, 46 years professionally and out here with you. And it doesn't mean there is no Holy Grail, by the way. I spent some time looking for that. How are you doing? By the way, if you find the Holy Grail, drop in the Trader Lab. Here's some order flow phenomena. This is an actual trade I was in. And this is a bracketing algo. You can learn about this. This is how order flow can give you some advanced insights. You'll notice how the liquidity pulled and it pushed from this side. That's the bracketing algo. I was short. As soon as I saw this, I blew out of my short. And the market then came above here and exploded up. And it doesn't mean order flow is the answer. The answer lies within you, putting a confluence of pieces together so you can understand the story of the market as it develops. Now, let's try to move on here without further ado or chaos. And I'm only saying that because I am on a laptop, and you know how that is, right? And I'm also working with multiple monitors. And I will say, trying to put this thing in carry-on luggage, they look at you like, could somebody help me lift this thing up? It only weighs about 400 pounds. Now, for October, we are having at Bookmap you can win 3 months of Global Plus with stocks and futures data. It's about a $600 value, and it's really called the Blue Jacket Competition. And all you need to do is mock up some charts. Now, the guys in Trader Lab, all of you, should be doing this as part of your homework. Reverse engineering, screenshots, annotations. Why? What? There's the blue jacket, by the way. Very cool. And here's some examples. A little explanation, what's happening. And that's the explanation in there. You put your little explanation in there, annotate it, what's going on. And everybody can get into this. So, and the winner will be selected. All you got to do is use the hashtag #FreeBlueJacket and drop it on Instagram, X, or LinkedIn. And you're in, as they say, like Flynn. Hashtag #FreeBlueJacket. Don't forget about it. Do it. As my mother used to say, free is good. Now, let me try to move some things around here, and hopefully things don't get nasty. Just please be patient here, guys, because this is not my usual thing. Okay, this was Friday's China tariff news, and I call that the Acapulco cliff dive. Any of you guys ever been to Acapulco? I've gone there a couple times years ago, and seeing those guys jump off a cliff for $5, and you think you're taking a lot of risk in the market. So this is the drop. Now, this is yesterday's RTH. I have to show you a couple things. One of them is, now yesterday the idea was it's something called responsive buying. And you guys can review the stream from yesterday. And this is an ongoing story, So what happened was we gapped higher. I think it was about a 70 or 80 point gap. So what is that setup? Let's think how the market works. The market goes up to go down. The market goes down to go up. The market goes up to go down. And on this day in the morning, it was go down to go, we'll see you later. Thanks, Tom. By the way, we'll give you a long distance phone call and maybe overseas. And down we went. And then we had a great day on Friday. It was longs in the morning. Then the news came out, and that's a big disruptor. News input disrupts everything because the market doesn't know, what is this thing worth? I don't know. What do you think? I don't know. So it's like we're out of here. Fire in the movie theater. Everybody runs for the exit. Now, this created an extreme. Now, whether or not we're going to take this out is not the issue for us as day traders. What is important to understand is that we have shorts in the market here. So if the market gaps higher, then what's going to happen to the shorts in here? Well, if we gap higher, some of these shorts are going to cover, and we might get new longs. So yesterday, and again, I'm only talking about broad strokes here. I'm not discussing, as far as what your plan might be. I'm talking broad strokes for developing traders, and what that would be is short covering. So yesterday was primarily longs. Now, one of the things I noted, and I don't remember if it was in the stream or in the chat, in the Trader Lab chat, and by the way, there is a link in the bottom of YouTube if you're inclined to visit the Trader Lab. There's no cost for it. It won't be abused, solicited, or otherwise, annoyed. But it is a serious community. It's about the business of trading, so it's not romper room. And, if you've been around, you probably have been in a number of environments that are not serious. This is strictly business. So if you're into the business of trading, Trader Lab might be the place for you to stop on your journey. So what we had then was a squeeze. So yesterday was longs only. Now, and I narrated those. The point I want to make is when we were going towards the upside, what I observed, and I think I posted this, was that the buying was weak up at the high of the day. Now, often, and we had a weak low. At one point during the day, and you have to go back and look at the stream, we came down and tested the low, but we missed taking it out by a few ticks. That's not rejected. It's more like, I'm just tired, leave me alone. And the market rotated, but we ran out of buyers. So, and yesterday, let me go back to what I spoke about, and then we'll move forward. Yesterday, I said the possibility was an inside day, which I don't think is a reach for anybody, not taking out yesterday's high or low, but also something called a neutral day. And a neutral day is a balanced day where you take out the first hour's high and the first hour's low. And that just means two sides are sloshing. It's like, what do you think? I don't know. How about you? And the market rotates. Well, yesterday we only took out one side and we had a weak low. So for me, and while I don't know what will happen, and we're not in the business of predicting, so I know you want to be right, so you want to predict the high and the low. I get it. You want to be able to buy the low of the day here. Many traders who are amateurs in this business will think every move down, every rotation is the low of the day, and they do substantial damage or blow themselves out of the business trying to pick the low of the day on a day like this, which is a trend day. So on this day, we had some short squeezing, but it wasn't substantial. So that sets up today for maybe we're going to come down to the other side. Now let's talk a little further. 66, 95, 50-ish, remember, ish, and I would say horseshoes and hand grenades, was the highest volume price from the trend day down. Think of this where at the end of the day, we balanced out and we rotated. And that rotation created balance or in other words, we've had enough, let's just hang out. And this was the retail price in a distribution from here. Now, what's important about it is it's high volume. Now, where was the other high volume? The other high volume from yesterday is 66.95. So here's the possibilities for today. Depending on the behavior, we have 66, 95, 96-ish, horseshoes and hand grenades. We have 66.70, which is a higher time frame, high volume. I'm going up in time frame, and I can't get into too much detail here. And then we have this around 66.79, next target, and I'll try to explain what these things are, and then 95. So, do I get this right? Yeah. So 79, 95, and that's as far as I'm thinking about it. What about you? And this is a higher time frame. So these are daily RTH candles. Hope you guys are with me. By the way, I cannot see the chats at the moment. I'm going to try to get them back, but things get a little stranger. One moment. Okay. Yeah, Ghost, you don't need to post all that news in the Trader Lab. We all have news feeds, so uh, you don't need to do that. Thank you. And let's get okay. All right. I think I've got the chats back. If you have questions, throw them in there. I'll do my best. Let's get the book map. Let's look at the first trades. So this is the RTH Open, 8:30 Central Time. By the way, I'm in a different time zone. Makes it even more interesting. So my computer's on Central Standard Time. I'm somewhere else. I couldn't even tell you. There's no daylight savings time here in Mexico, so it's totally confusing for me. So this is the RTH Open, and it's a gap. So we entered under opened under yesterday's low. Let's take a look at some of these parameters. Hope I got this right. So confusing. Yeah, here's yesterday's low. Here's the 66.70, which was my primary target coming up. So first of all, fill the gap here. Let me give you the next target, value area low, which is around 79. And then the naked VPOC from yesterday, which is our retail price, 95. So the target's coming up, subject to, who knows, yesterday's low, 70, 79, 95. I'm sticking with that. And then below, where is it? Hold on. 65, 95. Yeah, this. So this is the target coming down. And ETH low. So you got ETH low, ETH high. And now let me give you some statistics. I hope you're okay with this, that the statistics are going to be usable. We're opening lower outside of yesterday's range. There's a 72% probability we're going to get there. And the ETH high is over yesterday's high. So what are the odds? Good question. If you open lower, wouldn't you aim the barge this way versus that way first? So that sets up shorts. Just give you a sense of how this sets up. Filling the gap, getting to yesterday's low, about a 68% probability. Taking out the first hour's high or low, that's a coin toss. It's about 65% probability. Getting to the value area low, 45%. So, okay, I think that's enough to get us going. Yeah, Ghost, if someone could post in there, ask Ghost not to post the news. Thank you. Okay, so RTH Open, let's go. I'm going to show you my processes that I use. Some of these are advanced and they're not for developing traders. But I want you to see process. So RTH Open, helmet on, gap lower. You have the statistics. We have the lay of the land. I'm going to show you the first short. And this is posted in Trader Lab. I don't call trades. Why do you need to take my stops? We all take them. So we have to get over that. Not my favorite thing, but the casinos pay the gamblers. It's called overhead and cost of production. So RTH Open. We see sellers first. This yellow line is developing volume point of control. This is the high volume. Now remember, everything I'm showing you when I showed you the different levels that we're working, those levels all work the same way as you think of them as time frames. The difference is when I'm in this, there's no time. We're not using the clock here. We're using participant behavior. And that gives us more, pardon the pun, timely response. I think that's a pun. Got to be careful. My my English teacher heard this. I might get clubbed. So this is too low. So right here, this suggests we might go up. So I have, and this is 5 seconds in, so retail price, break low, break high, going up. So this is support, this is resistance. Now here, support, resistance. So the way I read this is, now this starts at 0, so there's no volume when we start. There's more volume here, and that creates the yellow line there, the highest volume. When you break away from it, now we get more volume here. There's more volume here than there is there, so the line shifts down. More volume. Now there's two possibilities, of course. If we break down from here, we might be looking at a short, but instead we break up. So when we break up, don't forget the statistics favor the ETH low. So I'm oriented to get short. So right here, I break high. All this is what's called an open auction. Open, go down, go up. What do you think, Lewis? I don't know. Is that too high or is this too low? And this is fair. So right now, this is support. This is, I don't know, maybe. And maybe that's too high. If I hold this, I might go that way. If this is too high, I could go that way. And you're going, boy, this is great. Watch. VPOC migration. What does it say? This is the language of the market. Too low, too high. When I break below it and I can't regain this, and my statistics say ETH low first, it's a short there, or it could be a short here. Watch. Resistance is here, don't forget. See the resistance. I'm going to put a little line on here for you. So this is where it was too high. So too low, too high. This is just, so the shorts are here. So let's look. You can be short. I lose my place here. Here, here, here. You could also be short here. Stops have to be above the high. So that's the first short. I only had a couple of trades today. Now you're going to go, oh, really? I want to do so much more. Well, ETH low, target, and then this, the 95, right? So I'm showing you where these levels come from. VPOC migration. I'm not paying that. Do you understand that trading is not this mystique? It's not this, oh, what is it all? It's so complicated. Actually, trading is rather simple. It's shopping. You know how to shop? You have the basis of trading, because that's all we're doing. We're shopping. What's too high? What's too low? What's fair? That auction takes place in your supermarket, except it's a slow time frame. You know, they don't change the prices much. Let's watch. VWAP mid, too high. Now, for me, this is a high probability target. So this was my target. Now, there's more to this. What is the language? Let's come back to the language. Too high, new retail price. Think of your supermarket. What happens, though, when the price gets too low in the supermarket? What happens? The sellers who put it on sale, and for us, the product is the S&P, if it gets too low, then what might happen? Then you can't buy it down on sale anymore. You know, when you threw 5 in the cart, now the market can go the other way. Well, I know this was the fair price from the Acapulco cliff dive day where the high volume was. What happens if this price is too low? Well, if it gets to, it's a target, that's the first part. So the short is over here. So the short was from up here, and you tell me, is this workable for you? That's one trade. And of course, we all take stops, so gotta, live with that. Now, If this is too low, I can get long. Now let's look at the long. Now I'm going to take you to a trigger, and I'm going to, since there aren't a lot of trades today, I mean, they're all great trades. There just happens to not be a lot of them. You know, a lot of us come into day trading thinking that somehow we're going to be whirling dervishes and that we have a, what do you call it, a one-armed bandit and an ATM in the basement, you know? And it's not the way this works. The way it works is being strategic and understanding how the market works. Now, let's go into order flow trigger. Now, don't forget, this is my target. Now, the other part of this is I trade the targets. I do not know what's going to happen, so I don't have the prediction thing going here, you know, about being right and knowing. The thing I know is how the market behaves and market mechanics, and that's shopping. So remember, if you're a shopper, you're way ahead of most traders who think this is the market's going to go here. It can't go any higher, you know, or it can't go any lower. And if you look at what happened on Friday, yeah, it can go lower. It can go lower beyond your imagination. I learned that just like the same things you have. I learned it, except it was the 87 market crash. It was 911, Desert Storm. I mean, just go on and on. I don't even remember anymore. The Hunt Silver crisis anyway, where they cornered the market. This is an order flow trigger. Now, this is what sets this whole thing up. This is a sell sweep, and this is the order flow. When I break below it, and this is advanced, I shared this in Trader Lab. One moment, please. Sorry about that. You don't want to hear my sneeze. So right here is resistance. Notice the behavior. But the sweep says the possibility exists for a reversal. Now I'm at my target. So right here, the teeth chatter because I have resistance. So here I'm coming down and I get my target. And I always front run them by a little bit. I don't mind telling you that. There's no precision in this. I also have liquidity sitting here, but this is the big liquidity. Sweep, pull back, test. Right here, it is suggesting to me, now, and this, if it comes up over here and takes off, trouble. If it just pops it a little bit and continues, no problem. So this is an order flow trigger. So this is resistance. So I have sweep. This is saying reversal. This is the order flow trigger. Says not so much. We come down here. Notice the resistance. I'm showing you an advanced concept. You can learn this in Trader Lab. See the resistance. Notice here, absorption. Now I'm getting into much more advanced order flow concepts. Target, sweep. So I'm at the target. I've got the sweep. Don't forget, I had it here. Resistance, 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 resistance going to zero, right, Tom? Not so much. Change. Now I got to get long. So let's look a little further. So this is aggressive buying, right? We can agree. What about that? How are we doing in YouTube, by the way? You guys have questions? I don't know if I'm seeing everything in YouTube at the moment. I think so. Please give a like. So let's move this out. So this is our support, order flow trigger. And now we're going to look for a retracement. Now here, we hit our VWAP. Our volume point of control is here. If we take any longs, they're going to be, this is a mean reversion trade. This is the mean. And to me, the primary trade that developing traders need to master is mean reversion. So if we come out here, this is what this, let's look at language together. So this is our outside, and nobody knows until hindsight. So let's get over it, okay? Do I sound a little, I'm just saying is you can't get these answers until hindsight. So we don't know this is the low of anything until the behavior changes. I'm above my resistance and I've got aggression. So that tells me, forget about getting short. Think about the long. The primary reason for being off this is I got my high probability target and I got this. So these are structures that are important to the auction. So now what I have to do is get long. So for me, I have a thing, kind of a philosophy, that retail traders, what they tend to do is they trail their stops under these tight swings. And the reason for it is because we're all the same. We're risk adverse. I don't want to give any back. I want to use a tweezer for risk management. Well, think about typical retail trader behavior. They all do the same thing. What that means is I know that there's going to be stops here and here. So if I come down and I come out here, I can look to be a buyer as long as I'm above this. So any trades I take, I got to be under here, or depending, I might be able to run it a little tighter. Let's look. Let's watch. Sweep. What did I do? Pick the stops. Remember where the stops go, right? Is this, when you say they pick my stop off, have you ever stopped to consider it's not them getting you, but you getting you because you are risk adverse and you have FOMO and you think if you micromanage your trade, you won't, quote, miss out? Have you ever thought that maybe the need to avoid risk, which is built into you, is actually the reason you're getting stopped out because you're not managing your trade prudently? It's just a question. What do you think? So this is a long. Can you see why? Let me explain why. If you're new to Trader Lab, you might not understand this. Why? Why would I wait? Why would I risk missing it? Because I understand FOMO. And I understand when I see this, I'm triggered emotionally by the fight and flight thing. So, but what I know is stops are here, you see? And here's the next part. And here's where I kind of came up with this. For myself, it was if the buyers are here and then the sell stops are going to come here, if the market rotates, why wouldn't we come into the stops? And why wouldn't the buyers who thought this was a good deal just step back in and buy some more? Does that make sense? So this is a long. And then the idea of this, since we got our primary targets, is to come across the range. And what else do we have? Since we have a gap, we have a probability. And what was that probability, you ask? Since we opened lower outside of range, getting the yesterday's low is a 68% probability to fill the gap. Well, so that was the next, this. And then 67, which is this, or 670, I meant. And then value area low. And this, 95. That's the target. Now let's look at the way this behaves. So basically short, long, and there's going to be one more that I took. I got to find it for you. So not a lot of trades, just a lot of range. I'm going to ask you guys, what's more important to you? Dopamine, riding the animal, grabbing the tail of the beast, or getting location? And by the way, there's your sweep. So the sweep tells me counter rotation. Now I'm looking for the stop pick. This is something I always try to do. And if let's say I got long here, let's just say I did. My stop cannot go here. My stop has to go down here. So, because I have the gap fill potential, that's risk reward. When I'm if I'm moving my stop further away because I know I'm vulnerable, it has to justify the risk. And for me, filling the gap was the thing. So no problem going there. So what did we have? Shorts down to here, long here to there. There was another one. So that was one short, one long. Now, VPOC migration. I'm going to label this. This is, what is it? The language of the market. Too low. Too low. Now I'm going to use the same process I used down here. The volume point of control was here. So I found too low, so I can then be looking to come here, go there. This shifts. So how do I trade this? I can get long for what's called mean reversion. So in the Trader Lab, I always say developing traders is one trade you actually have to master, and you can create potential sustainability if you learn how to manage yourself. And that is, this is mean reversion. So this, let me try to show this to you. This is a distribution of volume. You'll notice how it tapers off. This is because the market ran quickly when we came up. So this kind of thing, rip, and then we went into consolidation. As soon as you get into rotation, then you can look to buy the outside. Now, the thrill, of course, is where's the outside? You didn't think this would be, but I know that I can get long on any of these outside rotations. And then I've got to be outside here, because this is where, let me show you how this would work. This is the express train, okay, going up, 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 up. And I'm crossing above all of these were previously, here, let me come over here for you, on the way down. So when we were coming down, this is where it was too high. So this chop, chop, chop creates something that looks like this. Too high, too low, and then leave it. So it's rejected. That was the retail price. Think of this like a store. I'm not paying that. I'm out of here. See you later. So, but if we come back above it, now we're taking the resistance out. This little chop, chop, chop here is the same thing. Too high, too low, they're consolidations, and inside it is high volume. I'm not paying that. We leave, and then we keep doing the chop, 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 and that's all auctions. They're going too high, too low, retail. Well, at some point, and we don't know where it is, if we find wherever that location is that it's too low, and then we find it goes the opposite way, then it might mean what was resistance becomes support, and then this thing can reverse and start doing the, it's like the can-can. You guys ever remember the can-can? It's a dance. No, conga line, I think it was. That's what it was, not the can. So we find this, and now we start coming up. So now, too low, chop, 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 break high. This is support. Stop, pick under here, get long, come back, and then you're coming across the range. So far, so good. Now, when this thing shifts, we then have continuation trade, because we have 6670, which is this level, and look at the liquidity is resting. We have also value area low, which has, I think it was a 65% probability. Let me just look. 45% probability, if I got that right. Taking out the IB high, about a 65% probability. That's the first hour's high, which is at 9:30. So that's probably right here. and that suggests higher, then 70, and then next location up, which is that. So that would be it. But I want to show you the mean reversion trade. I got to show you this, because this is how you can get back into this thing if you're not in it, or for me, you could add or whatever it is you're going to do. So this is your high volume right here. You have a sweep that gives you this. Here you hit liquidity. You have a sweep that sets up the counter rotation. So I'm using the sweeps, the behavior with the liquidity. And in fact, one of our traders in Trader Lab posted that this is, big absorption that moves over, maybe. And the interesting thing about that is there's not a right or wrong, but the fact that this happens here and that there's when you have the high of the day, here's a question for this astute group of traders, whether you're in, of course, YouTube and in the Trader Lab. Is that the high of the day, or is it just set up a counter rotation? I'll give you my answer. I don't know. So if I know I don't know, but I also know that this is an important location, what would I be doing? Would I exit here? I could. Would I reverse there? I wouldn't. Would I short it? No. I can't predict the high of the day. But what about yesterday's fair price? If the fair price is the low of the day down at 65.95, is it logical that we could come back and check the one from yesterday? What do you guys think? And, you get inside yesterday's range, we can go higher. So this sets up the long. I want to give you the rationale for taking a long here. This is mean reversion. Now, what's tricky about mean reversion is where's the outside edge. That is the hard part. So I come out and I have to show you where the location is coming from, because this is something that a lot of traders just miss. Let's see if I can find it here. Here. So let's look at this. Liquidity by sweep sets up counter rotation into a sell sweep, sets up counter rotation, sell sweeps. So what do I have here? Something for you to think about. See if any of this looks familiar to you. This is now order flow support, an order flow trigger. Sweep, location, outside edge, break high, support, absorption. This is a long. Now let's assume you're not taking a long here. Got to extend this. Please, Bookmap, extend these for us. Support. VPOC migration, mean reversion, long to here or just out the top for that. Okay, so this is a mean reversion long, and I'm compiling what you might see areas. So what I know is, now what I don't know, of course, is anything, was this going to hold it or might it come down here, which it could. So in mean reversion, what you're trying to do is get outside somewhere. It could be anywhere here, even here. But this high volume here, you see this little node here? Let me show you another little thing. This is like fun facts to know and tell. And this is really advanced in some ways because it's really understanding what you're looking at. This is the auction. The profile, all it is showing you volume. It's not an indicator. It's just measuring volume. What does it say? See, this is language. What it says is right here is a retail price in this auction. This is an auction. It's like, I'm not paying that. Yeah, but it's on sale. If we leave the volume, this is like a volume point of control. That's called the volume point of control, high volume. Now, in the day time frame, using the word time frame, because we are using it for the day so far, that's the highest volume. But when I break it down into micro, as it's auctioning, all of these are like, too high, too low. I'm not paying that. Notice the volume right there. I leave it. I'll draw you another little line, kind of just so you can kind of see the language. So I don't use indicators. I speak market, and all I'm doing is reading it. Uh, that red bubble or delta with the sweep suggests the counter rotation. It's just a, and the volume is there. Why did it go down with green delta? Those are that is buy stops and maybe market orders. The aggressors. So it pulls back here. Now we break high. We chop again. The absorption is here. There's the icebergs. The sellers are there. Chop, chop, chop. Break high. So what it's saying to me is too low, break high, sweep. Order flow is there. So it's an order flow trigger. Break high, order flow, support, break high. I know that this is here, and I know this is too low. So if I'm getting long, and there's again, sweep would suggest higher. So if I got long here, my stop's got to be under here. If I do nothing here, my jaw's on the floor. I got this up here. This is resistance now. I'm going to put a box around it so we can kind of bracket this thing and see what it looks like. Now, I do have this target above me and other targets. So I know I want to be long. So this is a long or not. I'm showing you the options. And I hit this. Now, watch. VPOC migration. Support. Order flow trigger. See? Next target. Where's my support here? Notice what comes back in right there. Anything I do in here, stop's got to be below this because I had it tested over there. I have it tested here, here, here. These are order flow triggers. And I don't know, where are we? And the next target was there. That's all it is, guys. That's three. What do we have? One short and either 2 or 3 longs, depending how you lean. Is everybody tracking? This is Trader Lab. This is not complicated, guys, but it is random. And now there's not a lot of trades, as you can see, but look at the range of the trades. Is that something that would work for you? Yeah, I'm seeing a question there, Trader. Yeah, if I miss a trade, I mean, for whatever reason, most of the time, what I do is I anticipate the trades. I don't know. I know the only way I can trade this scenario is outside. So I have to come outside. I will not, I'm not a breakout trader. I trade the retracements because if I trade the breakout, my risk is going to be all the way down here. Why wouldn't I try to get long here or here? Because I have structure below me, you see. So, but let's just say I don't see it and I'm asleep at the switch or whatever. Then I have to just wait for the bus, And that is really the right answer. These are like buses. There's always a bus coming by. And even if I don't get the trade, for whatever reason, or it just doesn't come to my location, then I don't have anything to do. Now, these are nice. These are nice longs. And the thing that's important is, guys, it's not that you take every trade or that, but if you're learning, you would start to anticipate. You know your buyers are here, and you also know that these guys can be picked. Stop pick doesn't mean it will. So I'm not going to put my stop here. This is what most of you would do, right? This is what I used to do. I go, no, not so much. Let's come down here. And then this is also resistance. So subject to your plan, if you got long here with a stop under here, this would be your resistance. You could see the sellers are here. It's the same guys from here. See? So you could scale here, and then you just hold, and then you have 6,700, and then you've got the next one up here, this. So far, it's the high of the day, and who knows. However, just to keep you dancing, we have the possibility if we get outside yesterday's high, then the next target, which was yesterday's outside target, was 42, I think it is. And that comes, let me see if I can show you this without making trouble. And I might make trouble, so I'm going to try not to. It is trouble. Let me show you. Well, let me not show you that. Trying to grab a something off here. Here we go. And I lost all the chats. So let me try to show you this. So in the world of market profile, so first of all, this is the Acapulco cliff dive, all right? And you'll notice this was the target. That's the one down at 95. So that's where it came from. It came from this. This little node sitting out here is where the market paused, and it actually had a two-sided trade. And the highest volume for the day was here. Now, that's not too hard to imagine because this is the Acapulco cliff dive. And the way the market tends to work is it needs to auction areas. So it has to go, what do we think? Well, there was no auction here. So that's what set up yesterday's squeeze. And this is yesterday. And this was a weak low. This is a double TPO bottom. TPOs are 30-minute brackets is the way we used to do it. And this was the low, and that's not a good low. Good lows are extreme. Look at this thing. It's not even worth talking about. So yesterday was the squeeze, and we ran out of our buyers. So this was not strong by any means here yesterday. So if we only got one side of the auction yesterday, that sets up the possibility to finish the other side of the auction today, which is what that is. And then if we finish the auction, because we're filling in all of this, that was an auction. And the idea of this thing is to fill in this. So yesterday it was about coming up here. And yesterday's outside target was around 42-ish. So today, if we can take out yesterday's high, we might or might not continue here. That's called a single, by the way. And basically all it is a gap in a 30-minute bar. Think of it like a bar chart. And we broke away and we didn't come back. So it's like a little internal gap. And then we have another one up here. So the possibility exists, and nobody knows this, so I'm not saying, it's just possibilities. We get here and eventually back there and maybe out the high eventually. Because that's a news event. A news event is a big disruptor because the market goes, I don't know. So now the market can equalize out and just slosh back and forth and balance out. When the market gets out of balance, like it did on Friday, that's what creates these big moves. And you need to have a special or a separate trade plan for outlier events. So now the possibility is we're going to balance out. And that means basically, and I want to go back to yesterday very quickly. Yesterday I said we're going to have an inside day, which is it's not what you call a big leap, or a neutral day, which means we trade two sides. And what we actually did yesterday is we traded the upside, and today we got the downside, and now we're back. And we can still come above here and just fill this in and auction this poorly auctioned area. Because so we can just do whatever. So for me, and this is something, my job is not to sit here all day and trade. My job, at least the way I define it, is just trade the targets and then forget about it. Like be done, go do something else, or wait for another trade. And if there's no trade, I can sit here all day. Are you guys okay sitting all day if you don't have a trade, or do you have to make something happen? If you use the language looking for a trade, you already have a problem. That's hide. That's FOMO, making something happen. You're not here to make something happen. You're here to follow a vetted plan that gives you an edge. And after that, if you don't have a trade that fits that plan, you have nothing to do. Work on your crochet, get in the Barca Lounger. Does that make sense? I'm going to try to get the chats back here since they've all gone missing. That RM, the software with the profile is Investor RT. It's my higher time frame software. It exports these levels. So these are all updated in real time. These I put on manually from the higher time frame as targets. This I put on just so I don't get myopic, because that can happen. And these are I put on as the market develops. They're manual also. I have some other things that are automated also that I have out of Investor RT. So here's the current market. Let's see if we can read it. How are we doing in Traders Lab? By the way, if you're visiting in YouTube, there is a link in the bottom of YouTube if you want to visit the Trader Lab community. There is no cost for that. I'm going to try to get it back. Okay. Here, this is just counter rotation. Now, this is not a trade. Let's just see. Now, the trend is up. Here is a order flow trigger. Let's just see. Now, remember, we're trying to go here. Okay. So a short here is not appropriate. But let's assume we can, because the context is up. One of the most important elements in this thing is staying in alignment. Let's look. So there's no shorts here. But what I try to do is if I see a sweep, I can anticipate a counter rotation. If I see the sell sweep, I can anticipate a counter rotation. When I see the buy sweep, I can anticipate a counter rotation. If I don't get a sweep, it gives me more information. Here I have a sweep with liquidity that can suggest a counter rotation. But it's not a short. I want you guys to understand the priority of inputs is the context. What's the context? North. How are we going to get there? Great question. No idea. So let's take a look at this. I'm only isolating something for you to look at, okay? It's not a short for me. Just want you to see. So let's look at the language of the market. Just going to go into a little microstructure for you. This is your auction. Too high, too low, too high, too low. Retail, right here. I would change the color, but it would take me more time than just to put this. So in here, chop, chop, chop. Buyers are here. Sellers are here. Sweep, order flow. Order flow, break low. This is a trigger for potential downside rotation. Now, remember, it's not in this context. It's only behavior because all we have is longs. There are no shorts. Trying to show you is just what structure looks like, but there's no short. So let's watch. We're trying to go here. Remember, what's above yesterday's high? Buy stops. What did we do? We took out yesterday's low. What happened there? We took out the sell stops. What does that mean? Here's the key. What does it mean? Market goes up to go down. Market goes down, go up, right? Market went up yesterday to go down today, take out the longs. Then we got new shorts in. Market goes down to go up. Let's see what happens right here. This is just a little something, Retail price in here is right there, right where that line is. That's potentially too high. And all I'm talking about is microstructure here. I'm not talking about trades per se. By the way, this was the next target, value area high. And then yesterday's high, right? So this is too high. This is the order flow trigger. So this right here was resistance. Break above it, it is support. Break below it, it is resistance. High volume is right there. You can see it. And this is a sweep. So right here, we have to either push through or we're going to rotate some more. And remember, there's no short here. It's strictly a rotational thing. And the target is yesterday's high. And this. And after that, there's really nothing up here unless we continue, and then it puts 42. So if we get through here and through here, we can go. 42 would be the next target. If not, there's nothing going on here. But yesterday's highs on the hip parade, potentially. By the way, the Trader Lab is a community of like-minded traders who've come together to leverage their experience. There's no cost for Trader Lab. Doesn't matter how long you've been trading. It looks like this. There's a lot going on in here. Thanks, Ned, for that. So you can see there's a lot of conversation charts. Thanks, Repeat, for posting that. So this is what it looks like, you know? Everybody helping everybody else out because it takes a community. Also, there's the library of webinars. And Ned, thanks for curating this for us. This is the primer webinar. It really talks about really what the business is. It's got about 34,000 views, so I think it's pretty popular, considering there's no cost for this, and we're not out there there's nobody. I'm not a vendor. This is just here, and meet the Trader Lab. This is an advanced trader methodology. The thing about it is advanced doesn't mean complicated. It's actually the exact opposite. That's what makes it so advanced, because everybody thinks this is a business of plug and play indicators, like plug and play software. And then it's a video game of time frame and indicators. It's not. And that's where I think most retail traders, who are trying to squeeze the risk out and create certainty, run afoul of the business they're trying to be in. At least that's what happened to me. I even built trading systems, and eventually I was a fund manager, and now I'm out here with you. So I started in 1980, so I went through, you might say, as all the things you are now familiar with in your software toolbox were all new. So I spent time reverse engineering them. And really what Trader Lab is helping you understand the market, actually how it works. It's not based on your indicators. Your indicators just aren't what the market is. They might have a place. Anyway, start with this one, because in the casinos, the way they work in gaming, they only play games that have anchored inputs. They don't have variable inputs like you have. You have variable inputs in a random environment. You've just got, well, basically the old saying from computer days, it's garbage in, garbage out. So, and that's the holy grail of trading. How close can you get? Is there a holy grail? Well, no. Day trading, fantasy versus reality. What is it? Why do most traders using indicators fail? How to use order flow, trading gaps, trend days, and much more. And then there's a document section. Those 60 PDFs I show of structured trades, statistics, which you have to vet for yourself naturally, mean reversion. This is the most common behavior. And understanding mental obstacles. We even have Greeny, one of our members, created something called the trade loss calculator. This is your errors. So how about when you skip a trade? How about when you have a FOMO trade? How about when you bail out? How about when you move your stop when you shouldn't? All the stuff we all do. What does that cost you? Have you ever quantified what your errors cost? Do you know you might be on the cusp of being a profitable trader, but because of your errors, you're losing? Basically, what you're doing is you're giving your profits away. If you could reduce those errors, because instead of making a little note in a journal and then you turn the page, if you quantified them, you might see that you're throwing $5,000, $10,000 a month out the window. How long would you keep doing that? And then streams from all these years. I have streams in here, trend day configurations, 4.5 hour long live streams that you can follow. I know, everybody likes to see live trades. I have to tell you, if you don't know what makes a trade work, it's a waste of your time, certainly a waste of mine. But if you want to see trend, high volatility trading and continuation trades, you can see all of that. It's in these live streams. Stop gambling, start winning. just a lot of great stuff. Ned, thanks again for doing this. And the Trader Lab, by the way, is for serious traders. It's as I like to say, it's not romper room. So, and by the way, where are we trying to go? Yesterday's high. And then 42 or not. And remember the reason behind these trades. There's no auction here. And what the market tends to do is come back and it has to figure out. So that's why 42. Now, it doesn't mean it'll ever get there. We don't have any clue. But I can tell you this. I have a high level of confidence that yesterday's high is going to be taken out. Doesn't mean it will. It's not a prediction. I have no idea. A tweet comes out, somebody trips over the cord at the CME, and everything changes. So that part we don't know. But statistically speaking, here's what's important to know. What is there here? Buy stops. They become buyers. So if I come up here, I'm going to get more buyers. And then what we have to see is, do we get additional buyers to auction this this range? Hold on one second. Does that make sense? Is this making sense, guys? And if you have any questions, please post them. Sorry, guys, trying to get reoriented here. I click on something and it just is a little difficult. If you have questions, you're in YouTube, post them. I can't see them at the moment, but I'll be able to get them back here in a few minutes, I think, or a minute or two. Just moving things around. Okay. It's not easy doing it this way. Okay, back. Okay, guys, how we doing? So there's nothing more to do here except you're sitting in your long. That's it. Now, look at the range of the trades. So we had our long here. I think we had, I don't remember where the last one was. So here, I think we had a mean reversion long. And here, we had another long here. This, nothing except nothing really. This is just a rotation, and we're going for this. And then maybe 42. So it was a short down to there. Long setup. There was at least 2, maybe 3 longs, and that would be it. So, you'd have maybe 3, 4 trades today. Now, if you want to be a whirling dervish, the idea of this stream in the Trader Lab is profit, sustainability, career building, not action. So, you have to decide why you're in the business, And also, I got to tell you, there's no shortcut to learning this business. We all want quick. Doesn't work that way. This is like, equate this to being a top performer, like on a sports team or a surgeon. You have to have experience. There's no shortcut to experience. We all want to get in here and start pushing the button. That's really a pathway to out the door, because you're going to form a lot of bad habits. The way to get in here is to actually get very intentional, and you have to be the CEO of your trading company. You have to also manage that trader who works for you. Think of it as a separate person. That means the discipline. That means sitting down and reviewing the work, managing that trader, reviews, screenshots, building a trade plan out. And if you don't have a trade plan, you're sitting with the gamblers. Why? Because they don't, they're all doing different things. And the casino is only doing the same thing. You're using multiple inputs like indicators and time frames and trying to put a mishmash together, and it's not specific. You don't have an edge. You don't have an edge because you can't measure it. The only way you know you have an edge is that you have an anchored input. That's what my primer webinar is about. Primer webinar talks about anchored inputs. And I never understood that. I built trading systems and it optimized random inputs. And I was trying to overcome the problem. But it only was the problem. In other words, I tried to fix the problem and all I did was do it better. Same problem, randomness. So when you're optimizing, and a lot of you go back and look and say, oh, look at Friday. If I would have done this and this, I would have gotten so much, oh, look what I would have made. So next time it happens, I'm going to get it. Is that you? Well, in the meantime, you put yourself out of business. Anyway, I hope that makes some sense. This is Trader Lab, guys. So if you're looking for action, not the right place, I can tell you that the market dictates the frequency of trading. It's not something we decide. The idea of the trade plan is you can have a number of trades that are vetted, and some will show up, some won't. The one trade that shows up every day, which is the primer trade that I always recommend to developing traders come to Trader Lab, and it's a specialty trade. It's not a hard trade. And it's as difficult as any other trade, because they're all difficult in the sense of randomness, is the mean reversion trades, the outside in trades, the outside in trades, the outside in trades, They're all rotational. So when you get your counter rotation, you're taking the longs for continuation. And the way it would work is, and the last one we had was down here. This long was here. So these were longs, and that was a long, and there's your resistance, you see. This is your resistance, this is your long, this is your resistance. Why is it resistance? Sweep, liquidity, same as the order flow triggers. Support, resistance. Outside, so this is a reversion trade. This is a reversion trade. These are also, you could also be using these leaning against this. These are a little more advanced, but all these are potential longs. And the thing that drives the longs is that. So as long as this is open, which is yesterday's retail price, I could be taking longs. And then the cherry on the cake is going to be yesterday's high, which may or may not have, wherever it went. I don't know. Are we there yet? Did we get to yesterday's high? Did I miss that? And then if we get through yesterday's high, 42. That's it. Sticking to it. No clue. This is trading, not prediction, alignment. Okay. Oh, JJ, did we get yesterday's high yet? I can't see it here. Okay, close, but no cigar. Well, yesterday's high is on the hip break because it stops. $79.80. It could be. Whoop, let me try this here again. Hold on. I'm just getting my first cup of coffee. I'm so messed up with the time zone here. It's actually what is it here? 10:44 here. I'm in San Miguel de Allende. It's a mountain town in Mexico. Absolutely incredible, beautiful. Loads of history here. These, I think it was settled in 1500. It's got a lot of the old buildings. A lot of just incredible cathedrals, beautiful. And this is where they celebrate Day of the Dead, which is kind of equivalent to our Halloween. But here it's a celebration of family. They actually go to the cemeteries and have like their bring dinners, their deceased, their loved ones, favorite meals or beverages, and they reminisce. It's a very interesting way to celebrate life. So, and if you've ever seen the art from Mexico, where they show like the this famous art of like the skeletons and the different stuff, you might have seen it's all from here, I believe. Anyway, really amazing place. Liquidity. This is the one I was talking about. We were talking about a little rotation here. Oh, there's yesterday's high. Okay. Thanks, JJ. By the way, we have JJ Marks in our chat. He is a psychologist. I think he's semi-retired or retired. He drops some things in there for us from time to time. We have all different kinds of traders, and by that I mean different time frames. We have traders that just trade ETH. We've got traders all over the planet, uh, and different methodologies. And they trade different products. NQ is very popular. ES primarily because it's more stable. If you're going to trade NQ, you really are. If you can't trade ES, you have no business in the NQ. Um, ES for the stream, I focus on ES because it's for developing traders. And the idea is that it's more forgiving because it has more depth. If you're in a thin market, you're going to get skidded on your stops, ripped. And if you look at the NQ and you look at the order book, you can have 25 contracts sitting at a price. ES has, 90, 100. So the odds of getting filled at your stop or within a tick or so are pretty good, even in a fast market. Of course, past performance not indicative of future results. In certain markets, stops are just a suggestion, like Friday. That's why you have to be adequately capitalized to be in this business. I was speaking about Friday, and you guys should watch Friday's stream. But what about risk management? What's your plan for a report? Do you have a plan for a report? Now, sometimes in a report we anticipate, PPI, Powell, FOMC, all that, and that could create pandemonium. But what do you have when there's a tweet or something posted on Truth Social about 100% tariff on China? How do you think that impacts the market? Well, that's part of our business. They are outliers, and they happen. So you need, if you're in the Trader Lab, you would open your trade plan manual that you create to reports. And in a high volatility environment, you would have bullet points on identifying the current condition and what changes you need to make to your risk management. So if the volatility goes outside the typical average true range, you would then cut size or not trade, depending, or you'd cut your size in half to keep your risk equal, because you're still going to have these outsized rotations, but you cannot double your risk or put your stops at the same place you would, like you would in this condition. This is more I call this your, day to day, and this is primarily short-term traders like us. When the higher time frame traders come in, like Friday, levels that we use don't exist anymore. They don't care about the mid, the VWAP, and we always hear, oh, they're going to trade at the VWAP. They could care less about the VWAP in a condition like Friday. They are hedging and they're doing other things, and they just need to get their risk laid off. That creates this outside volatility. We can trade that volatility, but we have to have a plan for it. Traders who were prepared for it had a great day on Friday. And other traders who don't understand and haven't developed their craft yet, they can have a problem. Icebergs, liquidity, below the liquidity, pick a potential trigger. Now, how do you use this? If we think the trend is up and we have the potential to go to 42, which of course, clueless, but not ignorant, what do I do with this? Is this the high of the day? What do you guys think? Is it the high of the day? Now let's watch the retracement. Remember, there's no shorts in this environment. This is strictly, we're tourists here. Let's watch the behavior and let's look at the structure together. What does this say? And here's the stacking liquidity. We want to see the behavior. And remember, there's no reason to be short. There are no shorts. I'm trying to show you behavior. And of course, if the trend is up, I have no shorts. So I can't do anything with this. And remember what our target is, 42. Not a recommendation. It never has to go anywhere. Could do anything. If I get through 42, I've got this, which, again, not necessarily for today, but it's not my job. So 87-ish, but this is the next target, 42. And we know why, right? Because it's unauctioned, and the job of the market is to auction. What's too high? What's too low? So nothing doing here, guys. Just long. Now, the thing about this is you could be done at any of these levels and not be thinking about it. I primarily trade the targets. So I work a target and then if I see I'm going to go on to another location, I have the option to get back in, put another trade on if I get the structure, or do nothing. My last long, well, not my last one, but my first long was down near the low of the day, which was 95. 66.95. Is that right? Seems like a long time. Maybe, where was it? 65.95. I don't know. Yeah, it was 65.95. So 65.95 was the initial long. We're now up here. What do you guys think? Is this the way, if you could trade these rotations, and I'm just talking about me, you could, if you choose, you could just trade these rotations. It's risk reward, guys. So my stops tend to be 3-4 points, per contract. And if I'm going to take that risk and of course take stops, I want to get paid. I can afford to take the stops because psychologically I'm trading these larger rotations when they are available. So I can take stops, which I do, and then I get paid, when things work out. And not every day is a profitable day, and that's the real world of trading. It is what it is. So trading is randomness. So if you have edge, even though the individual trade, the outcome is random, you can deal with the psychology better if your P&L, because you're trading these rotations, takes care of those stops. The stops seem really inconsequential relative to the rotations. So you got to find this balance. Stephen, how did that work for you? The Gartley, yeah, I remember Gartley. I did Gartley. Fibonacci, in more ways than I care to think about. Elliott wave, wave counts, great in hindsight. Fibonacci, that's almost like saying if I throw mud at the wall, some of it's going to hit it. Everything works randomly. But we try to fit trading into a box of predictability. Fibonacci, well, let me see. Works good with the rabbits. I guess it's good for trading. You know what I mean? Yeah, Gartley was very interesting. I can't even remember it. Darvis box. There's so much. When you open up your software toolbox, all of us, and you see 200 indicators or 150. Here's the great question for this astute group of traders. Why do they need 150? Here's why. They all work randomly, and none of them have an edge. So what do you do about that? You go down the path of trying to put things together to create predictability and, of course, profitability. Suppose all you're doing is compounding a process with no edge. That's what I found out for me. And unfortunately, it took a lot of years. So that's all I can tell you about it. If that's you, then maybe you ought to visit Trader Lab. That's all I can tell you, because I also coined a phrase for myself called Trader Groundhog Day. Working hard, waking up in the same place. I even did a webinar on it because I worked hard. I started in 1980, and I can't even begin to tell you all the things I've done because I can't remember them. I shared an office with George Lane. He created stochastics. When I first saw stochastics, oscillators, I did think that was the holy grail. Now, early on, it was trend following, and short-term trading for me was swing trading, 2 to 3 day swings of the large S&Ps. So that was my short-term trading. And then I did a lot of spread trading, so currency spreads. So let's see what it does here. So outside edge is down here, this low volume. Let's just see what it does. Now, this might be the end of it, Don't we know we don't know. So we'll see. Let's go a little further. None of these are trade recommendations. This is an outside edge. And if it comes through here, then we're just going to keep going, and there's nothing to do. Here's where you have something called a low volume node. So if we were going to trade along, we would be looking out here. We want to get the stops out, the week longs. Remember, the market goes up to go down. So out in here is your outside edge. And there's no precision. That's what makes us nuts. Let me draw this for you before I leave you in a couple of minutes. If you're visiting in YouTube, please give a like. There's a link down there. If you're interested in the Trader Lab, there's no cost for it. So let's look at our structure here. It's there. See? So I can use this. By the way, advanced order flow concept. Resistance, resistance, break high, support, no trade. What's this? Absorption. I got stops here and I got support here. So if you're getting long outside, and these are reversion trades, you'd be trying to come here and here to this. And it's not a trade recommendation. The tricky part of this is where's the outside. So we need to be looking in this area to see what happens. So guys, not a trade recommendation. Personally, I would not necessarily take this. I'm just telling you, only because I'd sit back. I'm in my Barca lounger. But I know this is an outside edge. So this can do one of these. Now we got our primary targets. This is the other thing you got to be thinking about. Maybe we're done. I don't know. What do you think? Let's watch the behavior right here. And it's out. This is an area. Where's my liquidity? We're in this area. Let's see what it does. See what it does. Not a trade recommendation. I'm out of time. Guys, if you're interested in this, if this is resonating somewhat with you, and these are not trade recommendations, use the link in the bottom of YouTube. You can visit Trader Lab. There's no cost. Say hi. It's a community of serious traders. It's about the business of trading. So if you're interested in the business and potentially creating sustainability, that's what Trader Lab exists for. And there's no guarantee naturally that you will be successful no matter what you do, because you have to be willing to do the work, step back, undo habits you've created, which we all have, and then you go from there. Here's our sweep. So we're starting to get some elements. We have our stops under here. This is the low volume area. This is the area to observe. Now, if it just keeps going, there's no trade. We're outside this LVN. This supports this HVN. So right in here, we keep going. Then you're just sitting here in your Barca lounger. There's nothing to do. Please give a like on your way out. Appreciate you visiting the Trader Lab today. We're underneath this LVN. This is really where your last support is. We're getting below it, then there's no trade. All I can tell you. Please give a like on the way out. Appreciate you stopping by the Trader Lab today. Visit the lab. It might be an important place for you to visit on your journey. Appreciate you visiting me today, and look forward to seeing you tomorrow. Have a great day, everybody, and thanks again for visiting Trader Lab.